Good afternoon, everyone. This is James Pitcher from the Financial Services Club. Thank you for joining the first of this series of webinars that we're running. Obviously, given current circumstances, we're trying to do as many remote activities as possible in the event that we can't run events. And these events will be recorded and posted on the website as well. Without further ado, let's look at what we're going to talk about today. So first of all, we're hoping that Michael's online. I know he's had some trouble dialing in. I'm just going to see if I can, if you'll bear with me, I'm just going to see if I can activate him as a participant. So just please hold for 5 seconds. Okay,
Hello,
Michael.
James.
Yes,
hello, James.
You're on.
Oh, fantastic. Well, it's my job really to just speak for a minute or two to welcome everybody. Despite the pretentious photo, I do happen to be Sheriff of the City of London this year. And I've taken a particular interest in a variety of things, but in particular, making sure that the Old Bailey and the work that we do at the Central Criminal Court relates to business. And to that end, I'm delighted that Graeme Gordon, Kate Sarala, and many others in the financial services group of Livery Companies have picked up on the idea of strengthening and simplifying anti-money laundering as a topic this year in support of the Shrivo program. Basically, this afternoon's quite short and sharp. After my welcome, Graeme is going to give us an introduction to the task force and the schedule that they have for the next 6 months of the year. We're going to have a fascinating presentation on what can really be done by Natasha at Monzo, and then there's time for questions and some next steps. I just wanted to present really 3 slides. We've been deep at this for over 2 decades. Many of you will remember the tightening up that occurred in 2001. And we found in a study that we conducted at CIEN from 2004 and 2005 for the City of London Corporation in conjunction with the Institute of Chartered Accountants of England and Wales, the things here on the right: ineffective, costly, anti-competitive, very little feedback on what works, and a real conflict here that we're asking financial institutions to police everything in the world, anything that touches money. And there's just about any kind of crime touches money, whether it's purchasing a knife or conducting massive financial fraud. So we're in a bit of a tough spot here. This might not have mattered so much if it was relatively poorly enforced, but as we know, things are getting tighter and tougher all the time. And at the moment, we're beginning to see that if you want to open business in Britain, try opening a bank account is a pretty good discerning question about the ease or difficulty that this country and others face in a world of increasing trade frictions. One of the difficulties, of course, in this space has been people pausing and waiting, really on 2 things: regulatory simplicity, more of that later. But I think one of the big issues has been the idea that somewhere out there exists the ultimate silver bullet. This slide describes a sort of techie dream that everything can automatically be decided on big data, or throw your terminology around AI, machine learning, blockchain, if you will. I don't really care. The truth is that none of this has come to pass. I would point people who've got some memories back to the day when net economy, for example, was the big application that was going to save things. There were a host of applications out there that were supposed to deliver, but they all had extremely high false positive rates and were very, very difficult to calibrate to some degree because the feedback loops weren't there with the data. So what can we propose? Well, I would say that basically there are a few lessons here. There just isn't sufficient feedback for these big data approaches to work, and they may come, but it's been 2 decades that people have been railing at the authorities to try and provide some type of data set that is calibrated with reality. The simple and inexpensive automated surveillance systems that we have do produce fairly sensible results, but they are the same things that were implemented 2 decades ago, just looking for blatantly obvious anomalous transactions of various forms. I think these 3 points here at the bottom are areas we might want to discuss. In our experience, regulated industries just don't implement these unless the regulators whip them to do it. Now, that's not just financial services, that's equally the legal profession, the accountancy profession, the estate agents. The regulators, on the other hand, don't whip without the media whipping them. So we have seen whipping in 2 ways. One is people pointing out money launderers who seem to get away with things quite easily. And on the other hand, we talk about overregulation and difficulties. This is probably not the way to conduct sensible policy discussions. And yet we have seen many government announcements over the past few decades. For example, ultimate registers of ultimate beneficial ownership gently fade by the by. And so the people who are waiting on them or proposing them, finding they don't arrive. So we know that media whipping produces these unintelligent, absolutist solutions. But what could we possibly do that would be simple, sensible, and not rely on some pipe dream of technology coming to save everything? Because 2 decades on, I think a lot of us are frustrated, and we want a country that is strong against money laundering, but equally is simple in allowing people to do business. Thank you.
Thank you, Michael. Let's hand over to Graeme.
And may I therefore add my welcome to all of you to that of Alderman and Sheriff Professor Michael Mainelli. My name is Graeme Gordon, and I have the honour to chair the Anti-Money Laundering Task Force of the Financial Services Group of Livery Companies. Our purpose is fairly simple. It's to simplify and strengthen the AML process within the city and the UK as a whole. Strengthening, however, does not mean further or more stringent regulations, far from it. What we have now is more than adequate. Regulators and regulations which exist are enforced and are used as intended, and not gold-plated as a sort of a CYA for the institutions. In short, our aim is to ensure that when someone wants to simply start a business in the city in the future, they can simply start a business bank account. We're doing this in a number of ways, especially by contacting and with discussions with the leading banks and trade bodies to get their supporting the concept, but adapting their own methods and procedures, at the very least, considering how they need to adapt their own procedures to ensure that the best offering is available to the same entrepreneurs entering our city and our country. We will also engage with the delivery network, which brings me to the key element of how we engage with these various stakeholders, so that they start looking at this for themselves. Well, we have a website, but doesn't everyone? Our website, however, has and will continue to have case studies on it that has gone wrong and with solutions. Solutions being the key element. Along with this, we will issue newsletters, again with the case studies and discussion points and solutions. But more relevant to say, we will undertake seminars such as the one you're on today of best practices in AML implementation, and then again in May another one on the government view of AML, followed by roundtables and webinars, and as you will see on the screen that's about to appear, we will then go on to have further seminars, etc., concluding, COVID-19 permitting, with the launch of a protocol in September, which we will ask all financial institutions to sign up to. So, if I may, and with no desire to use up any of her time, I am delighted to introduce our first lecturer in this series, Natasha Vernier, Head of Financial Crime at the Challenger Bank, Monzo. Monzo provides current accounts in the UK and is on a mission to make the money work for everyone. The financial crime team's aim is to use technology to reduce the customer impact of their initiatives and to make identifying, preventing, and determining financial crime more efficient. Natasha joined Monzo when the company was 15 people and there was no financial crime team. Now, however, the cross-functional financial crime team of engineers, data scientists, and operational staff is made up of almost 20 people and serves Monzo's nearly 2 million customers. Prior to joining Monzo, Natasha spent brief time in San Francisco learning to code, and before that worked on mergers and acquisitions. Therefore, Natasha, Over to you.
Thanks, Graeme. It's great to be here. Thank you for having me. Just a few bits about Monzo before I get into the real meat of this presentation. So we are a bank that lives on your phone, and we have built everything from the ground up, including the entire banking infrastructure. And we have a full banking license, which we got back in 2017. We're currently the fastest growing bank in the UK, with now over 4 million customers. So Graeme, I'm not sure how old that information you had is, but 4 million customers as of just a few weeks ago. And we're currently adding 40,000 a week. As Graeme said, we are on a mission to make money work for everyone. And that really is the key. It's how can we make money work for everybody, taking into account those things that Michael said. Right? The regulation is there, it's set. How can we do things differently using exactly the same sort of framework as every other bank? So first and foremost, we are a bank. There are lots of articles in the press almost weekly about the likes of Monzo and Revolut and Starling. And we are described as startups or fintech companies or challenger banks or new neobanks. But really, we are a bank. And that means that we have to be compliant with all regulation. It means then that we can look at the experience of our customers to make sure that it's absolutely the best for them. And then we can look at what is right for the company itself. And it has to be in that order. So when we are thinking about that, what we like to do at Monzo is do what we call first principles thinking. What that means for us is we go back and look at the law really, really hard. What does the law actually say versus how is it being implemented by everybody else? And then we look at how we can make things easier. And then we think about how we can make this work for absolutely everybody. I'm going to talk through each of these three things step by step. So the first one, what does the law actually say? When we got our banking license back in 2017, it was just about the time that the money laundering regulations came out. And up until that point, almost every single bank had been doing what were called 2+2 checks for all of their customers. So they would gather name, date of birth, and address from all of their customers at sign up. And then they would run those 3 bits of information through credit reference agencies. And they would look for a match on name and address and name and date of birth. And with the regulations that came out in 2017, there was an update, and it said that we only had to verify name and address or the name and date of birth. This actually has a huge impact for customers, because if you're doing those 2+2 checks, you're only going to pass about 80 to 85% of people. And those could be for some very, very simple and normal reasons. Things like someone's just moved, maybe they've never voted, maybe they don't have a credit card. And so when we started in 2017 as a regulated bank, we went back to that regulation and we looked really hard at what it said. And it doesn't say you have to verify name and address and name and date of birth anymore. It is an or, and that or is incredibly important for the customer experience. In addition, there's a piece in the regulation that talks about understanding the purpose and intended nature of the customer's relationship with the firm. And it seems that almost every bank has interpreted this as, let's ask a huge long list of questions of all of our customers. And my challenge is, do those long list of questions, do they really answer what is actually in the regulation, quite a narrow question? I would challenge that actually you can get the purpose and intended nature of the customer's relationship with you from quite a few data points that actually you don't need to ask the customers for at all. So you can understand where they are, how often they're using the account. You can understand whether they have their salary paid into it just by looking at how they use their app or their bank account online for merely a few weeks. You can also think really hard about what products you're actually offering. So at Monzo, we have current accounts and we have business banking. You sign up for one of the 2 of those. And that tells us actually a huge amount about the purpose and intended nature of the customer's relationship with us. So again, it's really just about going back to that regulation and really reading what is written and making sure that we're answering those very specific and often quite narrow questions. And the third point on this slide is around really only getting the information that you need to move forward at that point in time. So this example is about business banking. The regulation requires that you gather certain information for beneficial owners, but you really only need to get a lot of that when the business is high risk. So actually, gathering lots and lots of arduous beneficial owner information from businesses straight at the bat, right at the beginning there, is unnecessary. Rather, gathering lots of information through data and working out whether the business is low, medium, or high risk, perhaps seeing how they use the account for a little while, and then asking for that information that the law actually requires, is a much, much more customer-friendly approach to this. And then we start thinking about where can we actually make things easier for customers? So if you just think about how customers like to do things today, nobody likes to go out to pick up food at restaurants. They like to use Deliveroo or Uber Eats. And nobody likes to pick up the phone and order a taxi, but they like to use an app to call an Uber. And the same is true, we believe, for banking. So people like to be at home on their app, doing their banking from the comfort of their own sofa. And I think that this provides a better customer experience all around. It's easier, it's quicker, it's actually, I think, safer. Are the fraud measures that we can have in place to look at documentation or selfie videos or selfie photos, I think they are better at picking up fake documents, manipulated documents, than people in branches who might not have the same level of training as machines or people who are looking at these things, thousands of documents a day online. Another example is passwords. So really making things super simple for customers. Like passwords are everybody has them, but if we were in a room all together right now, I'd ask you to raise your hand if you've ever used the same password twice. I know that I have. And passwords are inherently unsafe. And the same, I think, can be said for the password fobs. How often have you lost those? How often do you know they're lying around your house? You might misplace them. Family members, friends might see them. Actually, there is a much safer way to provide access to things, which is actually password free. And you can do all of these things if you just really test how you want to do it versus how everybody else does it. Something that's really key at Monzo is moving mountains in the background so that the customer experience is really exceptional. And that emoji on the right-hand side above the hard work is supposed to be a mountain. And we really take this to heart. So, for example, when you sign up for a business account with Monzo, we don't ask you to enter all of the information about your company. We can pull that for you from Companies House and then ask you to confirm it. Similarly, when you sign up and you give us a document, your passport perhaps, we can find out from that document which country you were born in. We know from your IP address where you're signing up from. All of this information we don't actually need to ask you, but it's all about prioritizing the customer experience and moving mountains so that you don't see that hard work. And then finally, how can we consider everyone? And here are just two examples of how we do that at Monzo. So what about those people who find it hard to get an account? For example, somebody who lives on a boat. As we've talked about, the regulation does not say that you have to verify an address, which would be a big blocker for somebody if you lived on a canal boat in London. So why can't you give them an account? Well, you absolutely can, but you just need to find ways around verifying that address or delivering them their cards. So for example, having it delivered to a workplace might be a workaround there. We're also, we've worked very hard right from the get-go to be very trans accepting, and there are a couple of things that we can talk about here. So we have to have somebody's legal name when they sign up. If a trans person has not yet changed their name legally, but perhaps they have a preferred name that they go by, they don't want their legal name to be shown to people that they're sending money to, or they may not want to be spoken to using that legal name by customer support. Well, we can surface their preferred name all over the place so that they have the absolute best experience possible. And going back to that long list of questions at sign up, companies and banks alike are always asking, are you male or female? And our question is, does that matter at all? We don't think it does. We think that we can get a lot of that data that we actually need through how you interact with the app. And so we really challenge ourselves, do we actually need to ask those questions? Because it makes a large number of people highly uncomfortable to have to answer it. So finally, just a few suggestions for you to take away. The first is have conversations about technology. It really does come back to this in terms of what can you do with technology that means that you don't need to put the customer out. You don't need to have them ask all those questions. Do Facebook, do Instagram, do all of those companies ask lots of questions? No, they use technology. And that's my second point. So think about your app or your bank account online as a product. All those companies, Uber, Deliveroo, Instagram, they are thinking customer first. And until all banks think customer first, the likes of Monzo, Revolut, Starling will just storm ahead. Thirdly, really read the regulation. So what does it actually say versus what does everybody else do? And then fourthly, automation and efficiency. So across your whole bank, where can you automate things? Where can you make things more efficient? The more of that you can do, the more you can save, and the more time you can spend focusing on the customer experience. Thank you. That's all from me.
Well, thank you so much to Michael, Graeme and Natasha, especially Natasha for that very insightful overview. Thank you very much. If anyone would like to ask a question, you can use the tab on the right-hand side of your screen to submit a question. And while you're perhaps thinking of doing that, I have a couple already. So Michael, someone's made an opening comment as a former regulator that they disagree that regulators only move under media pressure. Would you like to respond to that at all?
Well, that's very good, and I'm glad they're on a webinar responding to media pressure. I'm not trying to be too facile here. I do think, though, that regulation has always been a case of catching horses that have bolted, etc. And in fact, there's a very good example of it is the fact that it only picked up after 2001. Knowing that there's been money laundering going on in the country for ages. So it's not in any way a snide remark about regulators. It's a recognition of where we are. But I think if you go back and look at, for example, the Cruikshank report, which spoke about the immense, this is in 99 and 2000. I think it was published in 2000. And Cruikshank makes some very heavy remarks there about the state of concentration in the industry. In fact, we at Zien did a research report, which is on the website if you wish to look it up at zien.com. It's called Strategically Stagnant Banking. And in that report in 2003, we were pointing out that a rational bank marketing director in the United Kingdom, working for one of the big 4 or 5 banks, therefore constituting over 85% of the industry, would find it extremely rational, in fact, not to promote account transfer. And so for over 20 years, we've had an industry that hasn't made account transfer easy. And these are the sorts of things that regulators have known about for ages. But I think after 2 decades, I can point out that not a lot makes regulators move in the first place, let alone media pressure.
Okay, thank you, Michael. And there's a question here, I think very topical for you, Natasha. I'll abbreviate it, it's quite a long question, but simply put, how does Monzo or any company doing AML KYC work with GDPR requirements for the right to be forgotten, whilst simultaneously having to comply with regulation for keeping this data for a period of time?
Yeah, good question. I don't actually think the answer for the likes of Monzo is any different from any other bank. We keep data only for the regulatory required length of time, and then we get rid of it just as any other bank would.
Okay, thank you. We have another one. Can you elaborate on insufficient feedback, please? I think that is probably a question for, was that for you, Graeme?
I'm certainly taking it. I'm not sure quite what insufficient feedback to what the question is alluding.
Okay, well, we've got quite a few. Let me look at another one. So similar for in terms of GDPR for Natasha. How does Monzo look for allegations of criminality as per JMLSC guidance?
Look for allegations of financial crime, I suppose that could be interpreted in a few different ways. So quite what the question means. We of course have transaction monitoring systems that are trying to look for lots of different types of suspicious activities. We also work with law enforcement. We're members of the Joint Money Laundering Intelligence Task Force. So we go along every week and sit around the table with other banks and law enforcement to discuss live cases. And we have lots of really active communications with other banks about fraud that might be happening at that time as well. So we do engage with every type of forum and group that I think every other much more established bank also engages with in that regard.
Okay, and I think this one is for you, Natasha, as well. A word of caution from someone saying, I caution assuming that all customers are comfortable with their personal data being used to open bank accounts. Also, predictive algorithms have been proven to be discriminatory, so transparency might be an issue. What do you think about that?
Yeah, well, the second point I feel personally very, very strongly about as a woman, because most often those predictive algorithms are actually discriminatory towards women. So absolutely, if anybody, any company, not just banks, are using any type of machine learning, then they need to be very, very careful that the data that they're using is fair and equal and providing appropriate outputs. And in terms of the first point, I think that so when you sign up to Monzo or indeed any other kind of app, Instagram, Deliveroo, Uber, you are signing up to sharing a limited amount of information that does include things like IP address. And my point isn't so much that we should be using any little scrap that we can find. Of course, we take GDPR, but also just using a proportionate amount of information very, very seriously. But that information that we do gather, that every consumer signs up to when they download any app, really, we can use that to get a long way, which really makes the customer experience much, much better. And I think that that's why customers enjoy using those other apps like Uber so much more.
Okay, and a simple question for Michael, perhaps to wrap up. There are several other questions, by the way, but we're getting short of time. So if you've asked us a question, thank you very much. We will answer to you on email. But this final one for Michael, very simple, Michael. Do banks collaborate on AML?
The answer is that they do and they don't. Obviously, we've got the joint Money Laundering Task Force, Anti-Money Laundering. And so there are areas there. But one of the difficulties has been in the banking sector to be seen to be collusive. So in reference to the question that came up earlier, again, you've got a number of banks who could be seen to be anti-competitive if they do cooperate too closely. So there are limits to what they can do. But mostly they're not cooperating on this at all in the United Kingdom. In other countries, there are patchworks of good examples. Oddly, I might pick on Italy, believe it or not, as an example where banks share a lot of information and data sets to test AML software. And you can go around the world and find pockets. But it's not been an area that people have focused on. It's speaking from an economics point of view, if you're in a regulated industry, you like barriers to entry, and AML is one barrier to entry. The difficulty in the United Kingdom is it has a lot of spillover effects because people depend upon their banks as utilities for all sorts of payments and transactions. So an entity trying to do, say, an insurance deal in the United Kingdom that requires, say, for example, a bank account to pay lawyers, accountants, underwriters, brokers, could find that will find, in fact, that the AML difficulties are an impediment to doing trade. So the spillover is that the barriers to entry for the banks are also barriers to entry to trade. And I think that's one of the things that this task force would like to smoothen out a bit.
Well, that's a great way to finish. Thank you very much, Michael. There's just a reminder for you of the schedule that Graeme outlined earlier on. So we do have other webinars and hopefully seminars planned for later in the year. And just perhaps a final message for everyone. If you're not familiar with them already, the FS Club has a bulletin system now that you can use. You can directly access from the website, or you can subscribe to updates. And there is one on anti-money laundering. and it takes, as you can see on screen, from thousands of curated sources. You get a machine summary of the key points from forward-looking articles. So not just a Google search type format, it's actually a summary of various subjects or various topics rather relating specifically to anti-money laundering. So please do have a look at that and ask if you've got any questions on this or anything else, come back to myself. And we are pretty much spot on time. So thank you to all of the presenters. Thank you very much for dialing in from all around the country, I'm sure, given the current circumstances. And the recording of this webinar will be available on the website very shortly, and the slides are already there under our events. So thank you for everyone. We look forward to hearing, or you hearing us, I should say, on the webinar program that we have stretching over the next few weeks. Thank you, everyone, and goodbye.